Onto the markets now. The JSE trading mostly flat today, and it has closed marginally in the red. Was it an issue of profit taking, or are there some other global catalysts that contributed to the movements we saw? We'll find out in a moment with Chantal Marx. Let's take a look at your markets. Let's break those numbers down now with Chantal Marx, as I've mentioned, from FNB Wealth and Investments. Chantal, as always, thanks for your time. Let's start with that overall JSE performance and just find out what some of the drivers were for the kind of trading day that we saw.
Yeah, so I think that we're basically guided by what is happening internationally at the moment. And the big theme at the moment is inflation. When is it going to come? How severe is it going to be? And how are central banks going to respond to inflation? Of course, when central banks raise rates, that is bad for the market because it does place the economy under pressure. And what we're also seeing in the US is that treasury yields are increasing, which is further spooking the market at the moment. What I find quite interesting in the South African context, though, or what's very important for South Africa, is the fact that the gold price is also under quite a bit of pressure. That could be because of higher treasury yields. But generally, when inflation goes up, or the expectation is that inflation will go up, gold should be well supported. But that's really what's been dragging down our market. Gold miners under a lot of pressure for probably a third day in a row.
Right. Speaking of gold miners, let's move on to some company news. Tiger Brands, a bounce back after a decline reported in its full year results.
Yeah, I mean, this was a 4-month update to, excuse me, January 2021. Top line growth, so revenue was up by 9.4%, which was ahead of market expectations. But a lot of that was driven by price increases. And if you look at how sales progressed over the 4-month period, you saw sales come in pretty strongly in October through December, but then it seemed to run out of a bit of steam in January. That could be because consumers are actually feeling the pinch of a 9% basket price increase for Tiger Brands goods and goods. So it's something that they really need to consider. For now, things seem to be in control. They have been working very hard on fixing their cost base and working on stabilizing their gross margins. And that certainly is coming through right now. They also expect headline earnings per share for the half year to the end of March to be up by between 10 and 20%, which is quite a decent showing. And if they continue with this kind of momentum, they'll do well for the rest of the year.
Right. Now, another company that's gained momentum and where people are not feeling the pinch, Chantal, is Dis-Chem. People are looking for healthier products, and that's ultimately been good for them.
Yes, and what's very interesting about this specific Dis-Chem print is that they've actually showed sales growth ahead of clicks for the first time in a very, very long time. Retail sales growth for Dis-Chem was up by 10.3%, of which 5.1% was from existing stores, and clicks over the same period more or less was up by 8%. We also saw a really nice improvement in trading in malls. So if you looked at a few months ago, mall trading was down more or less 15–16%, and now it's actually only down about 1% over a 1-year period for this specific period under review, which shows that it's gained a lot. It's gained back a lot of the foot traffic and the sales that it lost during the initial COVID-19 lockdown period. And interestingly enough, we haven't seen momentum in convenience centers run out either, and online sales are still strong. So a very good period of trading for Dis-Chem, and I agree. I think it might be that people are just focusing on their health and focusing on the basics.
Right. Another bounce back that we've seen, Chantal, is BAT. those sales have rebounded strongly from that severe tobacco ban that cost them, I think it was over 500 million a month for that time period that we had that ban.
Yes, so I think British American Tobacco delivered a fairly steady result. This is for the year ended 31 December, and I mean, it was an extremely tough time for the tobacco industry. Although smoking was permitted in most countries, or buying cigarettes was permitted in most countries, South Africa, for example, and I know that Mexico and a few South Asian countries also actually banned tobacco sales, which is really difficult for a company like this, which they depend on sales momentum, addiction, and brand strength, really. And if people are going to start switching to other brands, that's generally bad for them. But they've come through with a very strong result, very strong cash flows, bringing down debt quite nicely. They're going to pay a very chunky dividend. And I mean, looking forward, I think they are very measured and very conservative in what they're expecting for this year, which is probably why the share price came under pressure. But just another steady performance from British American Tobacco.
All right, Chantal, as always, many thanks for your time this afternoon. That's Chantal Marx from FNB Wealth and Investments. We'll be back.